Hey guys, it's Buddy. I'm going to attempt to teach you how to put in these trades in the different brokerage platforms, and I have 4 of them. So first off today, we're going to start with interactive brokers. Then we're going to do thinkorswim, which is with the TD Ameritrade brokerage, and we're going to do streetsmart edge, which is with Charles Schwab, and then we'll do Tastyworks, which is Tastyworks. Okay. So you'll have to get to your order form or trade form here. You type in the symbol down here, then push enter and click options. And for all of these, we're going to pretend to go to the December 24th and sell the $24 put. Okay, so we're going to come up here to the tab, click December 24th. That way our option is expiring in 28 days. And by the way, I haven't done the research. You shouldn't make this trade. This is just a sample. But typically, I look for trades that are 28 to 45 days out. That seems to have the best ratio versus the best risk reward. So I stopped doing weeklies. I used to do weeklies, which means 7 days out or 14 days out. But really, it's just too much risk for the actual reward that you'll get, because even though it's shorter time, you're also just getting such a small premium that's usually not worth it. So we click on that, click on bid, and then we're going to click sell, change the quantity to whatever you want. So for example, 1. Limit means this is a limit order, which is different than an open order. Open order will fill at any price. And usually when the market's closed like it is now, you must put in a limit price order. And this is showing you, sorry, I can't stop those pop-ups. Up here it's showing you that the price someone is ready to buy, the highest price somebody is ready to buy is 118, and the lowest price somebody is willing to sell is currently 220. Now this is odd because that is a huge spread, but the market is closed, and the reason this is happening is because the price for space has increased. No, that shouldn't be happening because of that. I say the price of space has increased a lot after market hours, but that shouldn't really increase the price of options. So it's just weird that we have this huge bid-ask spread. Anyway, so you can come in here. If we do the calculations, give me 1 second, scroll down to 118, you click that. The reason I just chose this as an example is you take $1.18, divide it by 24, you get almost 5%. You get 4.9% in 20-something days. Anyway, so it's a good enough trade based on those numbers. Now, with this large of a bid-ask spread, you would actually want to go closer to mid or increase this, but I digress. This is just a sample, okay? So now you come in here, you put quantity, you change it to a limit order, you select the limit amount, and then here you'll see day or GDC. GDC means good till close, which means that if I choose day, this order will try to fill the next day or to the current day. Since we're putting in the order after hours, it will go into the next day. And then if it doesn't fill, then it will just expire. And you want that because if the price changes and you forget that the order is open, you don't want it to fill, next Tuesday or a week later or something crazy like that. And good till close means that, like it sounds, the order is open until you manually close it. So we come in here and put day. Now it's going to tell me I don't have enough money in my account. Okay, that's fine. But if I had enough money in my account, you would see the order go here, and it would have something that says like working. Right now it's got this little red arrow saying rejected by the system. But if I had enough money in the account, you would see working. So now let's go to thinkorswim. You come to the trade tab. If you're on the monitoring tab, instead you want to go to the trade tab. You got to see some of my past stuff there. Okay, you would type in the symbol here, which I've already done, SPCE, Virgin Galactic, SPCE, hit enter. Okay, there we go. Now, when you first start it, you'll see all these option chains. Option chains are the dates and the amounts. Okay, so it's different than when you have a stock, you just have one symbol for the stock. But for option, you have the underlying stock, and then you have all of these other choices under option, which are called option chains. So you want to come down here and click the date, so December 24th. You're going to scroll down to the price that we have already chosen, which is 24. You'll see here, same numbers, $1.18 to $2.20. Click on the bid column here. Hey, I should point this out. Over here on the left, you're seeing the calls. So if you wanted to buy or sell calls, you would do it there. Over here on the right, you see puts. So you see if you want to buy or sell puts, you do it over here. So if I wanted to buy a put, I would click on the 220. If I want to sell a put, I will click on the $1.18, and then that will fill in the information down here. Let's just pretend, let's clear that out so that you can see it from the beginning. So I click on $1.18. Now mine is automatically set up to put in a quantity of 10, and then you just change it. And it's always a little bit confusing to me because plus is true plus, and it's not moving into more contracts that are going negative. It's moving closer to 0. But here, so we see that we're selling a single put. The symbol is space. The chain or expiration is December 24th. The strike price, this is the price that we would have to buy it if it went below that price in the 20 or 24 days or 30 days that it would take to expire. Here we see the type. We're selling a put. We're not selling a call. Link, leave that blank. We don't use that. Here you can see limit. It's not letting me. Okay, there you go. Here it lets you set the price for a limit order. Here you can set it to a market order, which is also known as an open order, market order. Not quite the same. I guess market order is the correct term. You see stop limits, all that other stuff. That's mostly for actual stocks. So we're just going to put in limit. Again, you see there, good to close. You choose day. Then you see the exchange. Again, just leave this as best. You could choose where it routes to. I don't think it really matters unless you are. It matters if you were a really big player with millions of dollars and you wanted to try and hide your orders from market makers as they try to counter you and increase price or decrease price, blah, 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 blah. But for small orders like us, we're not putting in, $1 million here or there. We're putting in thousands of dollars. That is fine. Then you hit confirm and send. Now this one has a confirmation window. And so then it breaks it down to you. It says you are selling one space expiring December 24th, $24 put at $1.18. Your break even is $22.82. So it's taking $1.18 and subtracting 24 by $1.18. Your max profit is $118. That's $1.18 times 100. And your max loss is your break even times 100. So it's $2,282. And then here it's just saying, hey, if you do this, you'll have, it looks like I have a negative balance in my account of 65 cents. So if I made this trade, I would be up $117. And then it's saying your buying power effect. So if you have, why does it say buying power effect? Because that you could have margin in your account. And so it won't actually decrease. In some cases, it will not decrease your total cash available. Instead, it will decrease your buying power effect. And so it's telling you how much, basically, you'll figure it out, how much of that is coming out of cash and how much of that is coming out of quote-unquote margin or buying power effect. Here you can choose the account if you have multiple accounts with them, and then you can click save, and then, send. And then the order would be working. You would see the order down here. Let's just see if we can put it through. This is going to say rejected, right, because I don't have money in the account. But if I did have that there, you would see it here, and then you would be able to cancel the order by right-clicking and clicking cancel. Always helpful to know before you open an order how to cancel the order. And they're mostly the same. You find out where the order tab or section is. You find the actual order. You right-click it and delete it or cancel it in most things. All right, so now we're on StreetSmart Edge, which is by Schwab. You see I've already kind of led the way here, but you would type in space. You would click on INT. I don't remember what U and W warrants. These might be bonds or international symbols. For example, if this is trading in Asia, it'll have probably numbers instead of symbols. If it's in UK, it might have its own symbol / whatever. But we're in the US, or at least we're trading the US stock version of it. So just click on space. It's automatically loaded. Notice you come down here to the dates, just like with TDA and the other ones. They're all in a different location. That's what makes it slightly annoying, but they all have their own thing. So you come down here, find the 24. We'll click on the 118. Here we see the expiration, the strike, the type, we're putting in a put. Okay, because this one is already on set to puts. By the way, if you see it differently, so let's swap that out for you in case you're seeing something different. Bingo, bango, bongo. Okay, so if you click calls and puts on streetsmart Edge, you'll see calls and puts listed separately, and they're still going by date order. Kind of a weird system. Then you just come down here and click on puts. You'd find the 24, like we've done here. This tells you the last one that filled. His last trade was $1.49. It'd be nice if it showed you the mid, but it does not. So click on $1.18. It should fill in most of the information here. And then you're clicking sell to open. You're selling the put. That's why it's sell to open. And the reason you're selling the put is you're opening a new contract to earn premium. Sell to close is when you have the opposite order in. If you bought a put and then you wanted to close it early, you would click sell to close so that you're closing both contracts. You'd be opening a new contract with the intention of canceling out a previous contract. But here, we're creating the new contract, so we're selling to open. And again, change your quantity, choose limit, choose the limit price. Here you have day, good to close, fill or kill, which means it happens in less than a second. It either fills or kills it. And I don't remember what that one stands for. Again, I mostly just use day. Mostly leave these empty. Click review order. Here it's giving you your confirmation. And look, you see they all give completely different layouts and information. And so you have to get familiar with whichever trading platform you use, because here the confirmation, it doesn't tell you like your break even and all that other good stuff that we got from thinkorswim. But it's telling you here is what you're going to make. Your estimated commission is 65 cents. So you're going to get $117.35. Sorry, $117.35. I probably do have money in my account, so that will become a live order. Close that. Oh. Okay, so now you come down here. If you wanted to cancel it, you would go to account, not trade. So you click on the different tab. You would find the order status. Come here. You can right click it, or you can click cancel order here. It says confirmation. Do you want to cancel? Click the cancel order. And now that order is canceled. All right. Next, we have thinkorswim. I would come down here to trade. All right, and then you would click December 24th. And here you'll notice that we're not finding strike. Oh, because we're still in Kodak. Yep. Nothing space. December 24th. Find the $24. Click on the $1.18. And this is why I like Tastyworks the best. Because to me, the whole layout is simpler, the size of everything is simpler, and it's telling me, as soon as I click on it, it's telling my probability of profit, it's telling my probability of a 50% touch, sorry, a probability of it reaching 50% profitability if you want to close early. Sorry about that. It's telling you your extrinsic value, your delta, your theta. I'll explain what those are in another video. Here it shows you your max profit, your max loss. And it's telling me my buying power effect, how much that's going to go down because it is using margin. So my buying power does not go down $2,000 in this account. It only goes down about $300 in this account. And here, I love this. It's got a little slider, and it shows you right where the mid is. And then in the limit price, it's telling you whether you're getting a credit or a debit, which is useful if you're doing more complicated things like spreads, or to just make sure that you're doing the right thing. Yes, I'm getting a $1.18 credit, not debit. Okay, and then you can use the slider. You can be like, okay, I want to go mid, I want to go a little bit below mid, a little bit above mid. So if you wanted to go mid on this, you'd go $1.69. Here, you can slide it all the way down. The reason that I usually stick to doing naturals is I've had so many trades where I tried to go mid or tried to do something else, and it just never gets filled. And if I would have put it on the natural, I probably would have got filled. I would have got the order to go through, and I would have achieved my goal of getting these 5%, which is what I wanted. Now sometimes, if I don't mind having multiple orders, I'll do some at $1.18 and I'll do some at $1.69 right at the mid or whatever, in this case, because it's such a huge, unusual spread. And what that does is sometimes you get a blended rate. So I'll get some at $1.18, $1.69, which means my average will be here in the middle. And if I don't get filled in my $1.69, I'm not upset because I got filled at $1.18. Anyway, here you can choose whether it's limit or market. If you remember, market fills right away. Here we see time in effect, TIF, time in effect. So you can do day, good to close, good to, I forget what that one is. Again, I don't use those. Here you choose which account to put it in. It's giving you a confirmation, shows your buying power, your option buying power, shows you how much credit you're getting, and then it shows you your estimated buying power effect going down. So this option buying power here, if I made this trade, would go down $300, not $2,000 because of the use of margin. Just something to be aware of. Now if I click send order, it's going to go through. This means it's working. It hasn't gone through, okay, because it hasn't actually filled. So here you can see the differences when it's filled and when it's working. Right now here it says it's pending. You can see I also have another one that's pending because I want to try and close that one at 2 cents if it ever gets down low enough. And I set that to good to close so I don't ever have to worry about it or look at it. I'm really just waiting for that one to expire in 15 days. But if it expires early, if I can close it early, then that's great, then I'll let it go through. But here we can see our pending order of space, $1.18 credit, time in effect, the time that I put in the order. Time that you put in the order does matter because these brokers should be operating with a first in, first out sort of order frame. So if you put in your order on Sunday, then you have a better chance of getting filled on Monday morning. So some people wake up Monday morning, they find their options, especially if they're watching the pre-market trading, they're seeing the stock price go up or down. Maybe they'll try and come in and get this $1.18 credit, especially if it's going in their favor. Well, your order will go in first if you put the order in on Sunday versus the people who put their order in on Monday. And the good news is, if you could do the same thing, you could watch the pre-market, and if you didn't like the way the pre-market stock price was going, you could come in here, right-click, and cancel the order. But put it on Sunday because then you're getting ahead of the line as much as possible. So as soon as you found it and you've done your research, put in the order, and then if you want to close it, or close it later. So we can cancel that order, then it shows it's canceled, and there you go, that's it. So there you have it. A short little video showing you the 4 different platforms and how to put in a put sell. If you are still confused or if you have any questions, leave a comment below or send me a message if you have my contact information. In the newsletter, if you subscribe to our premium service at foxwithstocks.com, you'll get access to the same trades that I'm making as I'm making them. And what I want to start doing is actually record the video and put the video in with the newsletter along with the information. So it's all typed out for you, and you can watch the video to make sure that you're doing it exactly the same way that I'm doing it. And if that's interesting to you, if that's something that you want to do, my goal is to make 50% a year selling put options. I'm happy if I get above 20% a year. And if you have similar goals, you want to go to foxwithstocks.com, sign up for our free membership, start learning, and then consider subscribing to our premium membership. All right, thank you and have a great day.